Let's bring in CNBC contributor Jeff Kilburg. He's founder and CEO of KKM Financial. Jeff, welcome. And what do you think has been going on with the stocks levitating the way that they have been until today?
Well, Kelly, we all know markets love certainty, but we have seen euphoria. And when you see stocks stuck on automatic, it is interesting to see. We were just at 5,700 in the S&P 500 when we had that election uncertainty. Now we vault above 6,000. So I think you've seen volatility come off. I think you've seen a lot of people who were afraid of not deploying cash pre-election have been chasing this. We've also seen a gamma squeeze. You're seeing certain names, if it's the tech sector, if it's a name like Tesla, just explode to the upside. So shorts are covering, and this type of chaos, if you will, has caused a lot of people to reposition. But I do think we settle back in. I do think we understand that certain policies and tax consequences will not be implemented day one. I'm just afraid that the last 5% in the S&P 500 has been pulled forward from potentially Q1, Q2 of 2025.
And so what do you do strategically?
Well, I think you have to be considerate. We've always talked about the top 10 holdings of the S&P 500. They're overvaluated. They're stretched right now up over 35% versus the historical average of those top 10 holdings, Kelly, around 21%. So I think we have to think of names like Oracle, Palo Alto Networks. Look at Oracle, up over 80% year to date. Is there more room to run? I think the answer is yes. It's not NVIDIA, which is up 200%. I can't believe I'm talking about names that are up 100%, nearly 200%. But I think having trim your exposure, and I'm actually about to hop on an investment committee meeting here with my friends in Short Hills, New Jersey, to talk about repositioning portfolios. It's very considerate amount of time that you've seen, a historic amount of time, Kelly. We saw 2023. The market was up 26%, and here we are in 2024, up 27%. So I'm not going to say book profits and walk away from some of these names, but I think you have to trim and recalibrate some of your portfolio exposures.
All right, so you mentioned Palo Alto and Oracle are a couple of stocks you think you could rotate into. What others come to mind? And when you kind of look at where to leave take capital away, you're basically talking Mag 7 kind of names, right?
Yeah, we're reducing that exposure. We still want to own some of those names, but look at financials. Ever since presidential-elect Trump won the election last week, you've seen financials on fire. We are seeing a little bit of a comeback here, but I think financials will be a theme. But the one component everyone's been talking about, what's the catalyst that's going to make markets move lower? I don't think there's going to be one catalyst, but one concern, which I know Don brought up earlier, is the 10-year note. So here we are knocking on 4.5%. That's going to weigh heavily on these tech companies, even some of the small cap names. But I think you just have to be considerate, taking profits, rebalancing. We really like equal weight exposure. I know Goldman as well as Morgan Stanley's talk about equal weighting. I think that makes a ton of sense after such a phenomenal run. We're up over 40% in 1 year, Kelly. So pigs get fat, hogs get slaughtered, an old adage on the floor of the Board of Trade.
Quickly, what about Tesla? And I don't mean, you've just described kind of how you feel about it more broadly, but it's also been painful for people to try to short these things. You feel like maybe in the long run, even though they go through bouts of mania, they're, among the best generator of returns. Do you ever worry about walking away and leaving gains on the table?
Tesla is a long-term hold. I was pounding the table as the purest artificial intelligence play back in late 2023 and in 2024. I have aggressively sold calls into this move. It didn't feel great when I was selling the 325 calls as it was trading above 350 last night, but here we are seeing some profit taking. So if you have the ability to cover your position in a covered call position, that will mitigate downside risk. I think we're going to see a lot more volatility as we go into Q4. But a name like Tesla, specifically the relationship between Elon Musk and President Trump, I think it has a continued upward trajectory. But I think it trades $300 before it trades $400, Kelly.
All right, 328. Put a mark on it. Jeff, thanks for your time.